Welcome to our feature presentation, High Probability Trade Setups. What you will learn in this video is how and why do prices change. The price change is not a variable, it's a result. There are pre-stages of a price change and continuation stages of a price change that you can spot and follow with the right instruments on your hands, and that's what you will learn in that video. Let me introduce myself. My name is Thomas Baumann. I'm the owner and inventor of NeverLossTrading, and I want to make you aware of the risk in trading. Also, NeverLossTrading, just be aware of this. It doesn't come from the idea that you never lose a trade. It came from the idea that you can repair trades that go wrong, but never stop loss trading was a bit lazy. Let us dive into the details of how you can spot and follow high probability trade setups. Let us start out with a definition. What does high probability mean? It means to have an attainment rate above 65%. So that means out of 100 trades, your system should give you 65 winners and then 35 losers. So if you are there already, then that's super duper good. Then that video is not for you. If you're not there, listen very well of how we can help you to move in that direction, because the attainment rate of your trading can be measured and then compare it, but compare it on one imperative, clear-cut entries, exit, and stops, because that's important that you mechanically know when you enter a trade where will be your exit, where will your stop, or we also teach where will you adjust the trade so to turn a potential loser also into a winner. If you're not there yet, then things are a little more crucial, because then you might work with assumptions, and that is not good for trading. Trading has to be as mechanic as possible, following clear-cut rules spelled out by the system, being followed and being held through over and over and repetitive. And that's a big word, repetitive patterns. We help you to have those repetitive actions in a business plan. That means a financial plan where we calculate jointly what can be the expectation of your account holdings times the trades you can do in a period like a week or a month, and also with an action plan where you know what to do when and how to apply different trading strategies for going forward. Trial and error is not a thing that should be in your daily business plan. You should know what to do and how, and this is what we teach, and we'll give you some insights in here in that presentation into that world. And it is all done with us on one-on-one trading, so you will no more be on your own. You will work with professionals helping you to attain the goals or strive for the goals you want to attain. So now let's go into detail and look at a couple of charts. What you see here is the NeverLossTrading top line chart for crude oil. It's a daily chart between August and January. And the way it works is you have spelled out conditions, buy above 43.86, and when the next candle goes higher, then you're in a trade. This way you can work with a buy stop order, or the other way around, when the price drops and goes below 47.33, then you go short in the underlying. And you will see now one thing which we will feature tonight in particular, how to strive for longer distances, how to strive for key turning points, and how to move along with them. Let us go into some examples, seeing how the system performs and what's in it for you to win it. So first example you see here highlighted with number 1. And that's one key thing. So in that system, NeverLossTrading top line, we look at light hour candles, and we highlight them with a cyan dot. What starts in a light hour likes to end in a light hour. So imagine you were able to do that trade between 43 and we are up there at 49. Very nice trade, $6,000 per contract. If you do that on the continuation phase to the way down, it's number 2 here, and you go on, so you see we have repetitive happenings where the system spells out what starts in a light hour, ends in a light hour. And when you don't feel like trading a future on the risk this future requires on a daily chart, we definitely can show you how to participate on lower time frames in the price direction the higher time frame takes, or how you can participate within trading an option of an underlying that is referenced to the crude oil future and participate greatly in those big moves that are here on the chart. Key question, does that only work for futures or crude oil? No, totally not. It works for everything that is tradable, basically, because there's changes in supply and demand patterns, and it works for forex, it works for futures, it works for stocks, and they're referring derivatives like, for example, options. So what you see here is our latest development. It's called the NLT Strong Movers Alert. It's an alert only available to those who are using the NeverLossTrading top line system, which we are referencing here. And you saw here for January 23, we had 6 different stocks highlighted with a setup that we like, because we call that Strong Movers Alert. Yeah. And so with the setups going forward, let's see how we perform, because we always have here a last price, an entry trigger. Yeah, so where would we enter into the trade, a potential target, but that's the first calculation you saw. We want to end the trade at following conditions, at a 2 SPO move. Yeah, and you will see SPO is very essential for us, because that defines the speed unit, how far the price range will go. And after a 2 SPO move, there's an 85% likelihood that prices turn. Knowing all these statistics, we can act on clear-cut rules. So we know either we are getting out on the second light tower in the same continuation pattern, or we're getting out at a 2 SPO move. And why do we want to do that? Because we want to make the highest profits before market prices turn, because we all know it. Yesterday you were in profit and the next morning it's all gone. We don't want to do this way. We want to capitalize before prices turn and find those price turning points and help you to spell out strong movers. Let us now take those stocks one by one, and we look at the chart development highlighting those situations. Yeah, first CVS. Yeah, CVS had here the entry signal was formulated, ticked out as you saw it, and after the second light tower, we are supposed to do what? We are supposed to exit the position. Yeah, so trade to trade. What did we make? A 2.3% return on cash. I formulate always return on cash. Most people use a margin account, so then it would be a 4.6% return on margin in a matter of 1, 2, 3 days. That's a nice return, nice and predictable. But you see, it'll not be just a one-day event and a one-time event. So how did the next one work out? On pot, yeah, we had the direction right, but the next candle, next day, didn't tick out the overall direction. So with that, no trade. Yeah, so let's move on, because if you had a buy stop on here going in above 1908, that would be 1910, it would not be triggered, so we wouldn't have traded it. Then CF, very nice development. You see light tower to light tower. Yeah, light tower is the candle with the cyan dot. $2.50 return on a $36 stock, 7.2% return. Very nice in the matter of 2 days. Yeah, so that came out of this. And here on IP, if we followed the rule and said, okay, we get out after the second light tower, we made a 3.4% return on cash, or $1.90 on a $57 stock. Yeah, so if we held a little longer, then it was even more, but I didn't take that in the attainment rate. You'll learn during our mentorships when we work with you which ones to carry out into the next day and when to close at the happening. At the beginning, we go very mechanic, happening to happening, and we don't mind if we didn't make that. It's a nice return on the first base. Yeah. The next trade, yeah, we got the direction right, but the candle wasn't ticked out, so the no trade, the overall direction wasn't given. And here we have a very nice development. We haven't had the second light tower yet. Yeah, in TXN, Texas Instruments, nice entry. So here you see the initial stop. And have we traded for a 2 SPO move, we would be out at that candle and making a 2.9% return on cash, or $2.20 on a $78 stock. Yeah, so you see it's repetitive if you held a little longer. And how do you do that? There's a red line on the chart helping you to find your stop and how you can trail your stop along with the overall price move without being stopped, and it formulates the gauge of the expected volatility. All the details you learn in our mentorships, there's much more to it. You see here institutional attention coming into the stocks performing above and beyond what the average market does, therefore that blue. So there's a ton of individual details helping you to select a trade, but you saw with our NeverLossTrading Strong Movers alert, it's catered to you. The subscribers got these alerts on Saturday morning, and with that we're easily prepared for Monday morning, January 23, to participate and go along with those price moves spelled out prior. Let us sum up the trades. Here you see the individual lineups, CVS all the way down to Texas Instruments, then the trades we took and the returns. And you see the returns were higher than originally anticipated, but that's the move from target to target or for the two spoos. Here we calculated conservatively for the minimum move, but we wanted to be 1.5 times above that. And you saw that was realized. In average, we made a 4% return in the matter of about 2 days. That's pretty good. Imagine you could do that consecutively over the year, what that will do to your trading and what that will do to your account. In this video, we featured NeverLossTrading top line, and we offer currently only for a limited time what we call NeverLossTrading top line light. It's a lower budgeted price product, very competitive, and giving you all the opportunities that you can harvest along with those price moves at crucial price turning points. If you're interested in that, check it out on the website or write us an email to contact@neverlosstrading.com. And when you're serious about wanting to go that direction, we are happy to entertain an hourly consultation with you, finding what suits you best and helping you to get on board with our algorithmic trading systems to help you to spot and follow institutional money moves. We are looking forward to hearing back from you. Thank you very much for your attention. Bye-bye.